Hello, traders. We're back for the recap for Thursday, March 6, 2025. And we're looking at a daily chart of the SPY. So I left the zone on the board because they're still in the middle of it. They tried to get above it. They opened, immediately went higher, but came down to the bottom, spiked the 200 period moving average. That proved to be a pretty good trade for me down in this area, and then closed right in the middle of this zone. So what does this mean? First of all, did we know that there was a possibility they could gap lower at the open? You might recall we talked about this in last night's video on this half-hour chart, the 30-minute chart, also the hourly, but this is like the last 30 minutes of the day, this big breakdown candle, and they were coming up into it. So here they are. They were actually a little lower in the post market. And I said that this is a bearish consolidation that would typically play out to the downside. Price would drop, get below the low of this breakdown candle. And I said that again in the game plan that was sent out in the morning. We'll look at that shortly because if someone chose to, they could have gone short in the overnight session. But anyway, so just to get a visual of what they did, they gapped down here. And I'm just going to point out now, because we're going to look at it in a minute, that they would have to get above this area. I said 584. So this is 584. You can kind of see this general area. If the bulls could get above this, then they'd have a better chance of going higher. And they got, within 50 points or so today, but they fell down, so another 100+ point range. A lot of big moves, and we said that. But what does all this mean in the near future? Well, there's still no clear signals other than the fact that they're in this zone that the bulls might stage a rally. The timing kind of was good. Now it's kind of not good. But let's look at the weekly chart, considering that tomorrow is Friday, and look how close they are to the 50-period moving average. I talked about a zone down here, and there's a couple of reasons. I'll just go ahead and show you a couple things. First of all, where this 50-period moving average is happens to be the 50% retracement of this recent pretty big move here on the weekly chart, right there. And even if we looked at the bigger picture and drew some Fibonacci levels from this low way back in October of 2023, it's the 25%. Kind of all coincides. This area is going to be important. I'm not saying I would necessarily short expecting them to go down here, but it is a target. Since we're looking at a weekly chart, if they get to this target, then it's probably a good place to buy, like buy options. Buy some call options there for, a month or two. I don't do options, but we're talking long-term stuff here because we're at a weekly chart. It's Thursday. We have one more day. Will this week continue down and then find some type of support here at this 50-period moving average, which is also important for several other reasons? Entirely possible, because the bulls are not making a good showing lately. This is what was shared this morning. You can see the time. You can read the notes, see the levels. And this paragraph down here is kind of some disclaimers or caveats, if you will, that the way price is acting, you've got to give them some room. There's going to be some big moves, so don't get lost in the small time frames. You need to have a macro, big picture type of perspective. So anyway, this was good information because it definitely helped inform some trades today. So 3 levels were hit. Several trades you would have had to know what you were doing and act fast, because while there were huge moves, really the trades, these little scalp trades seem kind of microscopic compared to the big moves. So let's just talk about it. So after 945, they were actually under this level, under 573.96. This is the close of the 945 candle right here. So they'd already bounced off this level a couple times. So for all you know, you would have gone short at this level when they came back up into it a minute later, expecting them to go farther down. It didn't happen. So there is a fumble threshold that they got above pretty quickly. But the rules stipulate that a certain amount of time has to go by, certain things have to happen on the other side of that fumble threshold before you would consider reversing. And that didn't happen until they were way back down here, only 5.5 points out of the money. So you would have given some money back when you reversed. You would have had to withstand this, though. That's kind of the giving it more wiggle room we talked about. It's to be expected. You could hold for more than 4 points at these levels, but you'd also have to withstand more than 4 points out of the money. But they came down, and as I said, the reversal happened when it was 5.5 points out of the money, and then a quick and easy 4 points or more. We're just going to count 4 points because we want to keep that tracking log consistent, but quite a bit of points as they continued higher. So there's one trade right there. And then when they hit 576.67, now they went up to 576.68, I believe, 1 penny above the level. But you don't know what they're going to do. If you went ahead and if we were just treating this as a process, we would have triggered this trade at 576.62. We would have pulled price down. Just the same thing down here, by the way. Would have pulled the level down 5 cents toward price. And there was a pullback, about 5 points or so. You would have had to been ready for this, but you could have pulled 4 points really quickly and just jumped out. With this type of momentum, it's entirely reasonable to expect that there could be big swings and a big spike of the level or so. But anyway, strictly speaking, that is a base hit right there. So you've shorted this level. More than enough time has passed. You want to take a long trade at 567.72. That's 5 cents above the level. And there's a bounce. 4 or 5 points right there. Another base hit. They're down again to 573.96. Now, we've never gone short at this level, although they did bounce a few times. They didn't get close enough here. You're welcome to take a long trade here. It has not been traded on the long side. Now, this would have required you being out of the money quite a while because your profit target's up here somewhere, and they gave it to you. No rules were violated while they were under the fumble threshold. A successful base hit trade of 4 points if you were waiting around for it. They're down to 571.25. Very easy base hit. There's 4 points there. We've already shorted this level here. So really this is done for the day, both of these levels, and they just bounce back and forth. Pretty easy to see that now. These levels were important, and they're right in the middle of the zone. Larger zone was between 571 and 575, what we saw on the daily chart. And it just so happened that 200 period moving average, that black upslope, let's just look at it. This black upsloping trend line was around 571.60 or so, within a penny or two of that. And I was betting that they were going to spike below the 200 period moving average if they went down that far. So here's 571.60. And that's why I had 571.25, and they did that. So that was a trade. And I got into one trade right here. I'll show it to you because I thought they've got to be eyeing that moving average as a target. They're going to get down there at some point. The only time I was really involved was during lunchtime. Kind of unusual for me because I don't like to trade after 11:30 or 12 or so. But all this time I was in meetings. I got back. It was right after 12. Let's just look at it right now. So I'll set the stage here. I was in this trade before I started the recording. I got back to my desk around 12:15 or so, quarter after 12. Was in meetings all morning, saw what they were doing, missed all the other opportunities, but they were below this level here. And since I knew that there was this 200 period moving average and I had this level down here, I thought, well, that's probably a target with all this momentum. I'm going to jump on the short side since they, once they got under this. So they came up in here, I had a short position or had a short trade here, 4 contracts, and I'm in it at this point. So I'll play this and show you what I did. Ultimately, I changed this to 6, so I actually bought 6 contracts when they came down to actually a slightly lower level here. So that was over, 23 points or so. And that put me long once I got filled in this and satisfied that trade. With all this momentum, I thought, why not take a chance? You can see my fumble threshold up here, so I was willing to take a relatively large loss if they did a few things up here. But with the way they were going, just had a pretty good feeling they were going to go lower, and they did. But anyway, so the point is, I bought 6 with my short 4 position, which put me at a long position of 2. You'll see that happen pretty quickly, or pretty soon here. Just going to move ahead a little bit. There we go. So now I'm long 2. Thought, well, I could take 20 points off of here. I mean, I'm not eating lunch at this point, and I'd kind of want to, but I was even willing to buy 2 more. This is the spike of that 200 period moving average, remember? And ultimately, I took 1 contract off at the 20-point profit objective, thinking that if I can trail for 15 points or so, then what if they could just go higher and get quite a bit out of here? Because there's that possibility in the bigger picture. What I'm looking at here is things like the daily chart, the multi-hourly charts, not just the 1-minute chart. Of course, they never got that high, and they ultimately came down to stop me out with this just a few points from that trailing stop, which I'm not going to complain. $1,200 or so for that other trade, and that was it for me. That was no more trades. I went to start it over here. That's done, and I went and ate some lunch. So, pretty good day for me. And really, it was a pretty good day if you were playing by the rules, too. And we'll look at the tracking log to talk about it. So if you read the notes, maybe not the easiest thing to understand if you're seeing this for the first time, but start with level 2. This is right here. It would have been a fumble, 5.5 points. So you would have given those points back, reversed, 4 points on that recycle trade as you went the other direction. A base hit on this level when they went up, a base on the recycle, back down to level 2, base on that recycle, and then a base on level 1. So that's 5 base hits of 4 points each, and then the fumble. So here's where you would have landed. We're tracking 2 contracts per level, per trade, up to 48.35% rate of return so far for this year. And then here's how my trades work. So you saw the 23.5 points on the 4 contracts, 12 points on 2 contracts. So the average is around 29.5 on 4 if you do the math. So $5,900. So it showed what the actual gain was. And I'm at 44% for the year. So it's an interesting week so far. Tomorrow could be important. Depends on what they do. At least what I see now, I don't have a favorite direction one way or the other. It doesn't really matter with the way we trade these levels because we're good to buy and we're good to sell. Compared to, say, if you had a ton of money tied up in something like NVIDIA. A friend of mine was telling me about, he has unrealized losses in just NVIDIA alone that is worth more than the new Porsche he just bought. I told him that cash is a position, but anyway, he's been buying NVIDIA for years, so he's up quite a bit, but still. pretty bad last couple weeks for him. But on these futures, it doesn't matter. I kind of like it when we have a bear market. Elevator up, escalator down. But anyway, that's it for today. I'll talk to you in the next recap video for tomorrow. The video might get posted Saturday, we'll see. So thanks for watching, and if you found some value, consider subscribing. I'd appreciate it. Have a great day.